Hey everyone! Whenever large financial firms begin purchasing more shares of a specific stock, it's often a strong indicator of confidence in that company's future. This typically suggests that they expect positive movement ahead. Not long ago, I brought you news about BlackRock making a notable move by acquiring a sizable position in NIO during the first quarter of the year. That was especially noteworthy because, as many will recall, BlackRock had previously reduced its stake in NIO in 2024. Seeing them reverse that decision and come back to increase their investment is a major sign of renewed belief in the company's prospects. And for retail investors like us, this move offers a sense of reassurance and excitement. It signals that NIO might be heading toward a strong comeback. Today, we have yet another major update. This time, it's from the Union Bank of Switzerland, better known as UBS. They've significantly ramped up their stake in NIO by more than 60%. According to their most recent regulatory filing, dated May 13th, they now hold over 74.5 million shares. That's a considerable jump from their previous position, which stood at around 44.1 million shares as of February 14th. This massive increase in their holdings isn't just a coincidence. It reflects growing institutional confidence in NIO's long-term performance and financial health. This move by UBS adds to a growing list of large institutions that are bolstering their positions in NIO. It's not just one or two investment firms placing their bets here. We're seeing a wave of support from multiple influential players. Last week, it was BlackRock. This week, it's UBS. The pattern is clear. These well-informed institutions believe in NIO's potential. For us everyday investors, this kind of development is encouraging. When we see these heavyweight institutions making bold moves, it's a signal worth paying attention to. They have access to deep research, professional analysts, and data we can only dream of. So when they act, it's usually based on solid conviction. And right now, that conviction is pointing towards NIO being a company worth betting on. It's especially uplifting because many have questioned whether NIO can weather the storm. We've heard concerns about losses, fears of bankruptcy, and doubts about the company ever turning a profit. But when UBS decides to buy tens of millions of additional shares, it tells a different story. It tells us they believe NIO is turning a corner, that profitability is in sight, and that brighter days lie ahead. Let's not forget NIO's leadership has already laid out a roadmap to profitability, with expectations set for the fourth quarter of this year. The CEO himself stated that significant improvements are anticipated starting in Q2, and that operational efficiency will continue to improve throughout the year. This, combined with consistent innovation in areas like battery swapping technology, autonomous driving systems, and advanced suspension designs, reinforces the belief that NIO isn't just another EV company, it's a tech-driven automaker with long-term vision. NIO's technological approach sets it apart. Their battery swapping network remains unmatched by most other EV manufacturers, offering a level of convenience and efficiency that's hard to beat. Additionally, their focus on proprietary in-house technology, such as autonomous driving chips and intelligent hardware like active suspension and steer-by-wire systems, further solidifies their edge in a competitive market. All of these innovations suggest that NIO isn't just surviving, it's evolving and positioning itself to thrive in the coming years. For long-term investors, this kind of strategy is crucial. It's not just about whether a company is profitable today, it's about whether it's building the infrastructure and capabilities to lead tomorrow. And by the looks of things, NIO is doing exactly that. The market hasn't always been kind to NIO's stock price, especially in recent months, but these institutional purchases serve as a clear rebuttal to the pessimism. Remember, short sellers have long taken advantage of NIO's unprofitability to drive down its stock. However, as profitability nears and the company continues to strengthen its fundamentals, that narrative begins to lose its power. For those of us who have held on through the ups and downs, these developments feel like validation. It suggests that those who have remained patient, those who have stuck with the company through tough times, may soon be rewarded. When institutions like UBS decide to make bold moves like this, It's usually because they see the inflection point where the business transitions from struggling to flourishing. This news also invites us to re-evaluate our own positions. If professionals with vast resources are preparing for a NIO resurgence, maybe it's time for us to consider whether we want to be left on the sidelines when that turnaround happens. Of course, investing always comes with risks, and it's important to do your own due diligence. But the signs we're seeing now from BlackRock, UBS, and other players paint a picture of growing confidence. If NIO were on the brink of failure, large institutions wouldn't be flocking to accumulate shares. Their increasing investment tells us they see value, progress, and a path toward profitability. They see a company that's been beaten down but is now ready to rise. So, while NIO might not be dominating the headlines every day or boasting massive quarterly profits just yet, its journey is still unfolding. And clearly, there are some powerful investors who believe the best chapters are still ahead. As we look to the rest of 2025 and beyond, the momentum seems to be building. Now it's up to us to decide whether we want to be part of this journey or watch from a distance as it plays out. Thank you for joining us today. If you enjoyed the video, don't forget to hit the like button and subscribe to our channel for more stock predictions and market insights. Remember to turn on the notification bell so you never miss an update. Happy investing, and see you in the next video.